You know, the whole idea behind having insurance of any kind, whether it's homeowners insurance or renters insurance or car insurance, whatever it is that when something happens, you make a claim and you get paid. You know, at least you get paid the fair market value, right, for whatever it is you're trying to replace. Whether it's your car, they'll give you Kelley Blue Book value. If you had insurance on a fine piece of art, they're supposed to pay you back what that painting should sell for at auction, right? And with a house, you don't actually get what the house is worth, but they will pay you supposedly, if the house is completely totaled and destroyed, they pay you replacement value. They pay you the money that you need to rebuild the house as it stood prior, not what the house is worth if you were to sell it on the market. But once again, the whole idea is reinforced by the fact that they should pay you when something happens. But in fact, so many people have been not getting paid by insurance companies that it's becoming a big issue. And you know what, guys? I haven't made an insurance video in a long time because the last few that I did really didn't do that well here on YouTube, which tells me that the interest for this topic is not as high as some of the other things I talk about. But I couldn't help myself with this one because I feel like it's important for people who actually do care about this topic to know about it. So even though this video might not be a big hit for my channel, if you get any value from this video, please make sure you like the video and then share it with somebody else who might be interested and might get some value from it too. But in Florida, where I live, the insurance problems are worse than basically anywhere else in the country. We have now basically the highest premiums of any other state when it comes to homeowners insurance. We also have the most fraud when it comes to insurance. And now we also have more insurance companies not paying people their claims than ever before. In fact, when we look at the insurance data from 2022, out of all 50 states, if you were expecting to get an insurance payout in Florida, you were the least likely to get it versus any of the other 49 states. That's how bad this is. In fact, in 2022, more than 1/3 of all insurance claims in the state of Florida went unpaid. And you could say, well, maybe that's because there is so much fraud there that insurance companies are denying more claims and they're being more careful on which claims that they do pay out just to make sure they don't get scammed, which is a legitimate reason, guys. Don't get me wrong. I'm not saying that insurance companies don't have to, look for their bottom line to make sure they stay viable. But the issue is a lot of these claims that are being denied are also legitimate claims. Here's a listing for sale for $1.8 million, and this person is really taking a huge loss. Take a look at this. They bought this house back in March of 2022, basically the height of the market, for $2 million, and now it's listed for $200,000 less, guys. Oh yeah, real estate always goes up in value. Oh yeah, California has the hottest real estate market ever. Well, this is clearly proof that neither one of those statements are actually true. And to top it all off, they have a property tax bill right now of $24,000 a year. And guess what? Proposition 13 doesn't save you when you pay all-time high prices for a house, because you can see the previous owner was only paying about $4,300 a year, and then bam, once they got reassessed and bought this house for crazy money, their property tax bill basically went up 5x. This is the danger of overpaying for a house. This is the danger of having FOMO. This is the danger of being a real estate speculator. And people say right now real estate's only going up. You hear all these reports from Case Shiller, home prices up year over year. Well, clearly that doesn't apply everywhere. And you know what's crazy? The big insurance companies are the ones who are screwing people out of money more than actually the smaller companies. Because one thing that I'm always nervous about is changing insurance companies to a small little insurance company you've never heard of that maybe just went into business a few years ago. That sounds like a risky bet as an insurance customer to do that. But in fact, the people who are having the most unpaid claims are with, guess who? State Farm and Allstate. So those guys are the ones who are denying more claims than any other insurance company right now, because nearly half of all the claims closed by those companies last year went unpaid, guys. Half, 50%. That's insane, okay? These guys are scamming people out of so much money, it's not even funny. And guess what? Now that in Florida, it's harder to sue your insurance company, a lot of these unpaid claims are just going to go just as that, as unpaid claims. People are going to have no recourse, and they're not going to be able to get the money that they might rightfully be owed. After years, maybe even decades of paying insurance premiums, making a legitimate claim and having it denied. How would you like that? Now, one of the reasons they say this might be happening is because sometimes people buy insurance, no matter what kind of insurance it is, and they think they have more coverage than they really do, which is why it's important to make sure you understand what you are getting and what you are paying for with any type of insurance. I covered this, I don't know, maybe 6 months ago in a video talking about how I was able to lower my car insurance significantly, like almost in half, because I just cut coverages, I raised my deductible and did all sorts of things and went through the car insurance line item by line item to make sure I knew what I was paying for and what I would be responsible for or receive in the event there were to be an accident. And really, you should be doing this on all types of insurance that you have. And here's the other problem. After years of legislative and regulatory changes, many insurance policies today cover less than they did 5 years ago. Surprise, surprise, which at the same time, they also cost more than they did 5 years ago. So just like everything else in this economy, you're paying more than ever for less than ever. Welcome to 2024. And one tip from an insurance broker here, which I think is really smart, is that before you sign up with any type of insurance company, with any type of insurance, whether it's car insurance, homeowners insurance, or whatever, you should know what percentage of claims from that company are being denied. Well, I just told you with Allstate and State Farm, it's like half right now. But the problem is, all this data about how many claims are being denied from specific insurance companies is not public data. This is all secret, and this is all being a little bit revealed in this news story, but not to the point where you can just look it up online and find out, the rate at which people are getting their claims denied. So unfortunately, even though it's something that people should know when shopping for insurance, it's something that's completely hidden from us, and we have no choice but to walk into a situation blindly, not even knowing if the company you sign up with will pay you in the end. And the subsidiaries of these companies are just as bad, because there's a company called Castle Key Indemnity Company. They're a subsidiary of Allstate, and last year they closed 47% of its claims without making a payment, which is the highest rate in the state of Florida, guys. This is horrible. And there's about 40 insurance companies in the state of Florida, and last year alone, in 2023, half of those companies did not pay at least 30% of their claims. So this is a situation that's very concerning for people that live in Florida, guys, including myself. Although I don't rely much on insurance, that's why I lowered all my coverages and raised my deductibles on the car insurance. I'm tired of getting stiffed in that department. My homeowner's insurance practically covers nothing since I live in a condo. It just covers the inside of my 4 walls. I think my replacement coverage is like 30 grand or something like that. It's very low. And those are the only 2 types of insurance I have. And when I read stuff like this, it just kind of reinforces the idea of why have insurance on anything, because you don't even know after all these years of payment if you're actually going to get anything in return. You guys can't tell from just watching the video, but all I smell out here is just blooming flowers. It is so beautiful in this neighborhood to just smell all these flowers and trees and plants that are blooming around here. Is just wonderful. And it's not scorching hot because I'm not in Miami. Now in 2021 and 2022, State Farm closed more than half of its claims without making a payment, which is basically the worst on record, guys. So, you have 2 years in a row of them making 0 payment after getting a claim. So what happens to these people afterwards? Do they get their rates increased? Does State Farm drop them after not paying them? Because I feel like the right thing to do is, at least if you're not going to pay out a customer, then you shouldn't be insuring them anymore, right? Because if you make a claim in the future, then you may end up getting stiffed a second time in a row, and who would want that? But once again, the problem is when you sign up with a new insurance company, you don't know if they're going to be the next one to stiff you. And here's the other problem. Even if you do get a payout, you have to wait a very long time. That's the other problem with insurance. Usually when there's a big catastrophe, and you need the insurance the most, they're getting inundated with claims. They're having, big supply crunches when it comes to available workers and building materials and things like that during some sort of disaster, and it slows down the process even further. And some companies are just outright bad actors, okay? There's an insurance company based out of Tampa called Heritage Insurance, which was issued a $1 million fine by the Office of Insurance Regulation in May of this year for how it handled Hurricane Ian claims. And they also had 31% of all their claims last year go unpaid. And let's face it, like getting a $1 million fine for an insurance company is practically a slap on the wrist. What is that really going to do for them? It's not going to hurt their bottom line too much. Even though this was like one of the biggest fines ever received by an insurance company in Florida, it's like, who cares? Okay, we'll pay the $1 million. It's like, just like all these companies that used to, or still do probably, dump toxic waste into the ocean and destroy the environment and things like that, because it's cheaper to just pay the fine than to actually comply with the regulations. So here's some of the reasons that they say that they are potentially denying these claims. One of them is because they say the damage could be below the policy deductible or not be covered by the policy, such as situations which flooding caused the damage. The policyholder could also have withdrawn the claim, or it could be a duplicate claim. So they're saying these numbers, once again, look worse than they really are, because there's a lot of factors that influence all of this. And it's not that we're not paying our customers, it's just that, they're actually not covered for this stuff, or that people are making claims that they shouldn't be making, which very well may be true, guys. I am not an insurance expert, and I'm not going to sit here and pretend like I am and that I know everything about it and that those guys are flat up lying, but I wouldn't be surprised if they are. And guess what? The problem is insurance companies don't want this data to become public. They fight tooth and nail against having their data become public, but yet they want to know everything about you. Insurance companies will, buy your data from your car company now to see how your driving habits are. They'll fly a drone over your house to see what's going on over there, but yet you can't know anything about them. It's funny how, it's when it starts to happen in reverse and people want to see their data, they don't want to release it, but then they need to know everything about you just to be able to write you a policy and then go ahead and deny your claim. Funny how all that works. Even simple information like what the average homeowner insurance premium is not public data until it gets released like 3 years later when it doesn't matter anymore. So every time we talk about insurance statistics, the problem is the information is already completely out of date. We don't know what the numbers are today. But being able to know these denial rates is very important for consumer protection, but it's something that we don't have yet. So we'll see in the future if this data ever becomes public and we can know about this stuff, because people deserve to know if, one company is denying 20% of its claims and another one's denying 50%. That's helpful to know, guys. And you already know, based on this report, that Allstate and State Farm are the ones denying 50% of the claims. So I would probably avoid them if I were you. But yet all they do is increase your premiums. Even one of my subscribers, Rudy, he sent me his recent homeowners insurance increase, and I'll throw it up on the screen here. You guys can see in 2022, his insurance premium for the year for homeowners insurance was $2,775, and then in 2023, it got jacked up an additional $1,000 to $3,764. And then you can see at the latest renewal here, as of July this year, it's going up to $5,300 a year. So yet another, 30-40% increase? And that's 3 years in a row of having some pretty major increases. So we're talking about a 33% increase roughly in just 1 year, guys. Does Rudy get extra coverage for that? No. Is this even a crazy amount to pay for insurance? No. This is still kind of below average when you're talking about the numbers in Florida, but yet people are forced to come up with this money and pay. Otherwise, you could potentially lose your home if you have a mortgage. That's the situation people are facing with this. And here in California, where I stand walking at this very moment, State Farm is asking the state of California for a huge rate increase for the next insurance season, starting next year. Or don't they already pay a lot here in California? Yep. Do they already have a lot of claims denied here in California? Probably, but we still need more money. So State Farm is asking the California Department of Insurance to raise its homeowners insurance rates by an average of 30% for homeowners, okay? 52% for renters insurance, and 36% for condominium owners, okay? And if this gets approved, the rate increase would be the State Farm's largest in at least 7 years, according to their records, guys. You know, a lot of people look at this and say, oh, it's just a Florida problem. You know, just get out of Florida and you'll be fine. It's not. You know, it's a California problem. It's middle of the country problem. You know, Oklahoma has like the highest insurance rate in the entire country, guys. So it's not just a Florida problem. What they're trying to do is get a variance request that would allow State Farm to increase its prices more than they normally permit in order to protect the insurer's solvency, as if they're at risk of going out of business. They're not, but they use this as a tool to be able to get extra money out of people and to continue writing policies in an area that they know that they probably won't be writing policies in for very much longer. But right now, as it stands, State Farm insures 1 in 5 homes right here in California. Their last rate increase was 20% just in March of this year. So now they want 30% more for homeowners insurance, 52% more for renters insurance, and 36% more for condominium owners just in 1 year. So it already went up 20% this year from last year, and next year it's going to go up anywhere between 30 to 50% depending on which kind of policy you have. And at the same time, they also announced non-renewals of 30,000 homeowner policies on top of the 42,000 commercial landlord policies in order to reduce its risk exposure. So we're cutting the amount of people we cover, and at the same time we're charging our existing customers 30 to 50% more to continue covering you, or maybe not covering you if you make a claim. And in my last insurance video, which a lot of you probably didn't see because these insurance videos don't do very well, I talked to an actual insurance broker that gave me a ton of information for that video. And one of his tips was that here's the key with insurance. You never make a claim, guys. And the reason you never make a claim is because if you do, you risk getting dropped. You risk having your premium skyrocket. It's also a red flag in the insurance databases. So if you ever go to apply for insurance with a different company in the future, they look at that as a bad thing. That, oh, this guy has made 5 claims in the last 5 years with their homeowners insurance. This is a red flag. We're not going to cover you. If we do, we're going to charge you 5 times more than the next guy. I'll tell you one thing that California and Miami have in common, guys, is all these tiny houses that are extremely expensive. It's just crazy to me when I see the price of these houses out here and what they go for these, you know, little homes that are usually 3-bedroom, 1-bath, built back in the 70s for, you know, $1.5 million. It's insane. And of course, the spokesperson for State Farm says, we continue to look for ways to maintain competitive rates and help our customers manage their risk. Well, actually, you're probably just helping yourself manage your risk while using your customers' money to do so. I mean, that's what insurance companies do after all, isn't it? Now, under this proposal, people in California could see their insurance rates go up as soon as January 1st, 2025, but that date could also change as the department reviews the request. And you might see an increase even sooner than that if State Farm gets their way. So State Farm claimed that in 2023, they paid out $89.61 for every $100 it took in for premium. So it was still profitable. It's not like they lost money. They weren't negative, but it's not the profit that they want to see in order to, you know, remain in business here in California. So therefore, we need to raise everyone's rate. They've already been saying that they might be insolvent this year, and that's why they're going to be increasing the rates so much, because they're worried about not having the money to pay out the claims here in California. But one thing that I find interesting, guys, when it comes to business in general, insurance companies, whoever, doesn't matter, when there's a loss, no one wants to take that loss. No one wants to take the responsibility. They want you to pay for that loss. And this is especially true with real estate investors. And one thing I like to do is I like to just look at different listings online to see what I come across and share some different examples with you guys. And I found this place, which isn't too far away from where I'm at right now. And it's a townhouse that they purchased back in 2021 for $1,420,000, which is also a lot of money for a townhouse. You can buy a real house around here, like in this neighborhood that I'm walking through right now, for that price. But people are spending this on townhouses back in 2021, you know, as the market became feverish. And guess what? Today, the place is for sale, but they're listed for sale at $1,350,000. And I'll bet you that this is just the beginning. This is a new listing, right? They just listed this property on June 27th. So it's a fairly new listing. Most likely, they're gonna have a few price reductions before actually being able to sell this place. So just on the sale price alone, they're already $70,000 in the hole. Not counting closing costs, not counting any commissions, anything else that they're gonna potentially have to pay in order to sell this property, and also not counting any future price reductions, which are basically a guarantee. And I wanted to highlight this listing because I saw this and I'm thinking to myself, like, well, everybody talks about how, you know, real estate is still so great here in California and prices are going up and everything is, you know, still crushing it. It's only you guys in Florida that are suffering. Well, it's not, because you're seeing listings here, just like in Florida, where they purchased the place 2 or 3 years ago for a much higher price, and now they're selling it for less than they originally paid for it. And this is something I have warned against time and time again here on my channel for anybody who wants to buy a house today. You need to be mindful of overpaying for a house and, you know, buying into the FOMO. And just because inventory is low now, just because the price is high now, doesn't mean it will remain that way forever. And we're seeing different markets throughout the country that are displaying this, you know, even right here in Northern California, where it's very expensive to live here, guys. I mean, still, you know, 1.35 million is still a lot of money for a townhouse anywhere in the world. But someone thought it was a good idea to buy it when it was even more expensive and thinking, oh, don't worry, I'll just sell it for a profit when I need to, or, you know, try to flip it a few years later to avoid the big capital gains taxes. Well, it's not working, and it's not working for a lot of people right now. And honestly, I think this is just a small preview of what we're gonna see over like the next 5 years. You're gonna see so many distressed sales like this, and people like that can only hold on for so long, right? They're already losing money on the sale. Maybe they're rich if they were able to afford a place like this, and they can leave that listing on the market for a year. But if they're not living in it and the place is empty, and that every year they're just, you know, losing money on that, eventually they're going to have to lower it to a price that makes sense for someone to actually jump in there and buy it. And this is before we've hit an official recession. This is before unemployment rates have jumped substantially, anything crazy actually happening, and we're already seeing this level of distress. I think this is just a small preview of what's to come with real estate, with insurance, with the economy, with everything. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.